Good morning, everyone. This is Mortgage Pros 411. I'm Audrey Boissonou with my co-host Kevin Casey, and the dork in the middle on the bottom is Robbie Chrisman. Welcome, Robbie.
Wait.
How are you?
Audrey, you might be the one down in the middle, depending on whose camera is watching.
All right.
Yeah,
Well,
I'm
okay.
on top.
Are you? Okay,
Yeah.
keep telling yourself that, buddy. All right. So, Robbie Chrisman. So I wanted to read your credentials. I don't typically do this for people, but like I was just saying, as you were about to put a pair of sweatpants on your head, I want people to understand that while we're having this conversation today, that there is a good reason for them to listen to you. So you have had, when did you start in the mortgage business? I know you were an infant, right? How old were you?
5, I think.
Probably
No,
14.
yeah, 14. He started working literally at 14. So you worked at all sorts of places. I won't name them, but you were director of capital markets at SoFi. You had roles at various companies and have a capital markets background. So there is some knowledge there, right, Robbie Chrisman?
Yeah, such a credible introduction. You had roles at various companies. I'm sure the
Well,
audience.
okay, I'm trying
Wow.
not to call out every company that you worked at. So would you like to name some, or should we just leave it at that? So you work capital markets is really the point here. And you host the Chrisman Commentary podcast every day, which I have been listening to, and you are great.
Thank you very much.
Yeah, I actually really enjoy it. I mean, I know I sound surprised, mostly because I was. No, I'm just kidding.
Little do you know, I'm gonna flip the script today and just ask you questions this whole time. So
That's not going to happen. Okay, so
Yeah.
tell us a little bit, because as people know, because we mention it every week, we're part of the Chrisman Commentary media lineup. Tell us a little bit about what that is exactly.
So Chrisman Commentary, people know as the daily email, which is kind of an institution in mortgage. But 4 years ago, we launched a podcast. We just hit our 1,000th episode last month, which is wild. 1,000 episodes is wild.
That's
But
crazy.
this last year, we launched a bunch of video shows, weekly video shows, monthly video shows, rebranded our website. There's some really good thought leadership writing on there. None of it's pay to play. The thought leadership stuff's really good. I would suggest you check it out. ChrismanCommentary.com. We're working on building out a comprehensive vendor network and directory. We're working on building a community aspect. So taking what my dad originally started back in the early 2000s and expanding organically, not losing that credibility. And I view my job as that of a steward to maintain relevance and push it forward and add value to the mortgage industry. So the shows are just a part of that. Very happy to have you two on there. Got to have an origination show. Got to have, I mean, Audrey, you are like the best at ear to the street, what's going on, that sort of thing. So you're who I go to for that stuff. So
We're basically the ones who get hit by the bus first.
Yeah, there you go.
What?
You ever been hit by a car?
No, thank God.
I have.
Several times?
No, just once. I was on a bike. I was 15 on my paper route, just for the record. And the guy, yeah, that's a whole story. Anyway, all right. So you're really in the middle of everything. I mean, speaking of ear to the street, so you're traveling all over the country. You're at all sorts of conferences.
I'm in the middle of your logo right now.
I know, your big head. There you go. That's so much better. Just for the record, Robbie got his hair done today. So if it looks a little floofy, that's why. Anyway, with all that being said, you are traveling the country, you're at conferences all the time. So what are your current takeaways in the industry for what's going on out there with LOs in particular, but just what the sentiment is? What are people thinking about the things that are happening in our industry?
Well, it's amazing what 6 months can do.
It's amazing what 6 weeks can do, Robbie.
Yeah, well,
6 days
rates have come down.
6
Rates
days.
have come down in the last 6 weeks. I was going to say, if you go back 6 months ago, I think it was September 15th, the Fed did its first rate cut. There was all this exuberance and optimism in the mortgage industry. It was rates are coming down. We're gonna have a refi boom. There was like a 2-day refi boom as a result. And then rates actually went up because people thought, some of Trump's policies might be inflationary. Who knows what tariffs will do, and I know we'll get into that in a little bit, but it didn't materialize. And so there was it's like that phrase, it's the hope that kills you. There's all this hope out there in the industry. And when it didn't turn into actual volume, I think to start the year, at least, we saw a lot of companies thinking, holy smokes, if rates don't go down, I don't know how I'm going to make it through 2025. And so that joy and that hope turned into, I don't want to say despair, but there's when I go to these conferences, there is a lot of, hey, something's got to change for us to be able to, stay in business almost for a lot of companies. And I was thinking that there would be a lot of mergers and acquisitions this year. But to Kevin's point, I mean, rates have come down each of the last 6 weeks. There's talk of a recession, which it's always funny. People want lower rates, but what do you want to get you to lower rates? You want a pandemic that shuts down the world? You want a recession? What do you want? We might be going there. There's a lot of spooked investors out there. Markets are pretty spooked right now. So I would say that the rates coming down, obviously there's a lot of clickbait headlines out there about rates have come. It's still not the refinanceable percentage of the overall MBS universe out there is still minuscule. So you could say like refinance is double. Well, if there's 1% of the population that's refinance eligible and it goes to 2, refinance is double. It's like I don't see volume being much more than it was last year, unless rates go down below 6. But maybe we'll get there with Trump. Who knows? Yeah, there you go. It's long-winded. I don't normally talk that much. Last time I came on this show, I was told you need to talk more. So I'm doing my best, Audrey. Is that too rambly for you?
I'll take that over I ask you a question and you just sort of give me a one-word answer and then stare at me.
That was our first interview with Robbie. I remember that one. Oh my God.
Long way since it.
You're much better now, Robbie.
What my favorite thing is actually, okay, so on your podcast, you've been experimenting with accents lately, which is dangerous territory as far as some people are concerned, but I find it really funny. What made you think that an Irish accent was something you should tackle?
Well, if you listened to today's episode, you would have seen that there was, or heard that there was a Russian accent. So something for you to look forward
Wow.
to. I don't think what I'm about to say is racist. I think you can do the accent as long as they're white. So like Irish, Russian, like that's kind of the rule of thumb, right? So
It is. You're totally right.
I won't ask you if Italians are white or not. We won't go there. But
Go French. Go French.
Yeah, there you go.
I always remember I bet you there are people on this show that don't remember the joke books. Do you remember the joke books that had Italian jokes on one side? You flip the book over and then it was Polish jokes. I mean, we were the laughing stock of everything. So anyway, okay, I just want to make sure that we mention before we get too deep into the weeds that, as always, there are a lot of economic reports this week. We have CPI 10-year auction tomorrow. We have PPI and initial job claims on Thursday. And CPI, just to remind you, we were really looking forward to better inflation numbers the first part of this year. Do you remember that? Because the replacements for last year were so high. But do you remember last month? They released CPI, and what did they do? They raised last year's numbers so that the replacements weren't as extreme as they were expected to be. So we didn't get the bump. Speaking of hoping for lower rates and hoping for something better to come that will make the rates better, that didn't happen. So here we are again. We've got CPI tomorrow, PPI on Thursday, like I said. So hang on, because they will move the markets or can move the markets positively or negatively. But I mean, I am so over trying to guess what's going to happen with the rates, because we have these forecasters that come out and give us some sort of idea of, oh, on this date it will be this, or this is going to happen and then it'll be better. The reality is,
And then everything changes.
we didn't used to have refis. That didn't used to be the mortgage industry. It used to be people because they needed a place to live. Do you remember? None of us remember that. I would probably remember it more than anyone, but it was not all about, oh my God, we've got to, it's just like corporate earnings. You got to bump up your corporate earnings every quarter or you're a loser, and they've got to be this much and they got to be, okay, we need to help people get into houses.
Yeah.
Focus on purchases, which are the lifeblood of everything, that have to happen regardless of the rates. We have a little more inventory this year than last year. Rates are about a quarter better than they were a year ago. Maybe they'll get better, but it's certainly not straight up or straight down. So focus on purchases and don't worry about all the noise. There's so much noise, right? Like, what do you think, Robbie?
I think you're feeding the noise by talking about what's CPI going to do, and if it's all going to be revised later, payrolls last week, if it's going to be revised way lower later, what why get so worked up about it? And sure, it'll move markets, but I'm
There's
glad.
there's a difference though between being aware of what is going on and what potentially could move the market so you can help as your clients and trying to forecast, oh, just wait till May, wait till this thing happens, right? Don't you
Sure.
think?
And my first thought when you went down the CPI and PPI path was, CPI is not even the Fed's preferred measure of inflation, but all
Right.
these data points, take it as a whole. No
Right.
one data point should dominate your thinking. There's manufacturing indices, there's home sales, there's GDP, there's pay, there's all these different points. Take it in aggregate. And what we're seeing right now is a really mixed economic picture. The economy, the labor market's still good. We're seeing manufacturing start to slow. Inflation's looking sticky. There's a lot of different things going on out there. One thing though that's concerning to me is sentiment, whether it's builders, whether it's consumers, dropping. People thought, oh, a Trump victory is pro-business, it's pro-economy, it's gonna be good. That is almost turned on its head here. And so I try not to get too worked up about anything, but when it comes to consumer sentiment, that drives discretionary spending, which is a huge part of the economy. And if that starts to fall off, the economy is going to.
Well, according to the New York Fed Consumer Expectation Survey, consumer sentiment is down. So the people who are expecting they can't make their payments in the next 3 months has gone from 13.3% to 14.6%, which is the highest since April of 2020. Remember April of 2020? We were like a month into lockdown and the whole world seemed to have.
Okay, but what was the number in April of 2020? It wasn't 14%.
It's the highest
Since
of 2020.
Since the highest. But what was the highest? Was it 30% or was it 14.6?
What the number was in COVID, who gives a
All right.
cares? Okay, those people expecting their financial situation to worsen in the coming year. In December, 20% of people thought it was going to get worse. In February, it was 27%. That is a huge jump. That's almost a third of the consumers that were served. You try to say that word. Surveyed think it's going to get worse. So, and that's not great. But I will say it is an opportunity for us. Because somebody who's paying 32% on their, $70,000 in credit card debt is going to be a little less concerned about disrupting their 3 or 3.5% mortgage rate, especially if you are a mortgage professional and you point out with numbers that you've run actually that here is your blended rate, here is what's going, you know what I mean? So if we do math, this is an opportunity for us to help our borrowers. Correct? Correct. Asked and answered. And then small businesses, NFIB came out with their surveys, and that's the National Federation of Independent Businesses, and that's down as
online credit application.
So those who are expecting the small business owners who are expecting the economy to improve went down 10 points. Those who plan to increase employment went down 3 points. And those who plan to raise people comp, which I assume is compensation, went down 2 points. So all in all, not great. And then you've got the Atlanta Fed who have lowered their Q1 GDP estimates, like almost a 5-point swing in the last couple weeks. So now they're
week even
to be at 2.4, negative 2.4%, negative 2.4. Morgan Stanley and Goldman Sachs have also lowered their estimates for GDP in Q1. So, and again, to be fair, going back to, what are we going to be in a recession? Are we not? These policies are new and we don't really know what the outcome will be. I mean, maybe it'll be sunshine and unicorns in 9 months or in a year. Maybe everything will be fine, right?
So I think Robbie's got someone talking behind him, if I'm not mistaken.
I think it's car dealership music here. Audrey, why are you playing Chicken Little here? I mean, if the sky falls, then rates go down. Isn't that good?
So in every recession, other than the one we caused, and when I say we, I mean Wall Street, and then,
No, brokers caused it. That's what every congressman told me when I went to visit them. You
what?
guys caused the 2008 recession, was mortgage brokers.
Exactly. So any recession that we didn't cause is typically good for housing, good for rates. The rates come down, and during and after recessions, housing does great. So that is not our concern, right? Our
So in fact, housing has to get better with all these tariffs, because if the tariffs keep going the way they're going, there's going to be no product to build new homes with. Therefore, existing homes are going to skyrocket in value.
Let's talk about this a little bit. So last week, Uncle Powell, he made some comments, and if you recall, Friday, the bond market went to HE double toothpicks. So he had said that the Fed can take a wait and see approach, and they weren't in a hurry to cut rates. He said the economy is growing at a strong pace. I mean, never mind Atlanta GDP estimates. They expect inflation, core PCE, to reach its 2% limit, but it will, and I quote, be a bumpy path. And then tariffs. He says that the spike, if they God, if they spike prices, it's a one-time thing and it won't impact their decisions. So Robbie, can you please explain to us this idea? Because I hear it over and over again. People keep saying, oh, the tariffs are just a one-time hit, don't worry about it. It'll just be a one-time thing. So explain that, please. You're muted, baby.
Muted, but you sound better.
Yeah, I know, for real. Explain why I think it'll be a one-time thing, or explain, what do you mean? You warned me about this question. I didn't prepare at all. What are you asking?
Weren't even listening, were you? God.
No,
So-
are you saying it's a one-time thing,
Oh.
and I have to explain why?
I am saying that I keep hearing, including Jerome Powell, saying that the hit to the economy with the tariffs will just be a one-time hit. Explain how that works and how it trickles into things and why it would we us once, not ongoing. I don't really understand that.
See, I'm not in that camp with Mr. Powell necessarily, because we saw with the pandemic when everybody, there's this talk of inflation, it created this wage price spiral. And I could see a similar thing happening here with tariffs. If tariffs, are actually enacted, and it's not this kind of, what is it called? Chicken when two cars are going at each other, Trump and Xi or Trump and Trudeau or whoever. If they're actually enacted, things are going to cost more. Workers are going to demand to be paid more. It's going to create this thing, or upward spiral, excuse me. I mean, in terms of, if you import something from Mexico or you import something from China, sure, now it's 25% more one time, but
but it's continuing.
I'm not an expert. Kevin, you take over. Come on.
I'm going to take over for sure, because if it's a one-time spike and they raise tariffs on Mexico, this for instance, and now your avocados cost 25% more than they did. So instead of paying $1, now you have to pay $1.25. But then they remove the tariff 4 days later. Who cared? It's like, I just didn't buy the $1.25 avocado, but now they're back to $1 and everything's hunky-dory and there is no inflation. If they raise everything at 25% and this tariff sticks, then that 25%, now your floor is $1.25 for your avocados. And suddenly you're like, I think what I'll do is I'll just buy one less avocado a week in order to keep my budget for avocados on track. And I think same thing with housing costs, like all the developers they'll find another source for lumber. They'll find another source for the metal and stuff that's coming from Canada. But they may not be able to do it quickly. And so we're going to see a bump in price. And I think that's what they're talking about. You're going to see a spike, but then the market adjusts. Do we continue to buy the stuff from Canada, or do we find another source? Do we buy it and start, lumbering all the trees in Oregon and Washington before they burn up in the next summer fire? We'll see.
Okay, so Canada, Ontario in particular, just levied a 25% tariff on the electricity they export to the Northeast.
Mm-hmm.
That is not a one-time hit. That means that people's electric or whatever energy bills are going to increase by 25% going forward. That's not a one-time hit. So that's why I really don't understand. I've heard multiple sources say this. It's a one-time hit. So anyway, all right. Well, we will try to get.
One of the things just perfect timing. Here's my cup of tea, right? Okay. Most people drink coffee. I drink tea. But some people drink both. And when the price of coffee goes up, they switch over to the other for their source of caffeine. So people will adjust to inflation and buy elsewhere, or they won't buy at all. Like for me, I don't buy as many eggs as I used to buy because $18 for a carton of eggs is a little excessive. And I don't buy where Audrey does because I have to get up at 6 o'clock in the morning to go buy my eggs. I'm not making a special trip for my eggs. I buy eggs when I happen to be in the store. And I kind of like going to the store that has the eggs versus the ones that don't have any eggs because they sold them all for $3.99 at 6 o'clock in the morning. So I just buy fewer eggs. So people adjust, people adapt to inflation, and that's why it will work its way up.
So when you're
You
not,
seem to be handling it very well based on your attitude there. So keep it up.
so when you don't eat as many eggs, you're eating something else instead. So
Yes. Sardines are $1.89 for a can of sardines.
God,
That's a lot cheaper percent source of protein than an egg at $18 a carton.
okay.
I'm finally entertained here. This is good.
Okay.
I learned all of this when I took economics back in college. And I went all the way through, advanced economic courses. Econometrics was my final course in college. Did anyone ever took econometrics? It's a nice mind-blowing class there. So yeah, I love economics and all the little ins and outs of it.
Audrey is just dying to change the subject. Audrey, what did you major in college?
not poli-sci and music, but that's beside the point. Okay. So there is a correlation between the stronger dollar and the impact on tariffs. And so I heard a discussion where they were talking about how, for instance, the components that go into a house, for instance, that are manufactured in Mexico, only part of them will be subject to the tariffs. And and again, the idea that we're going to replace, I mean, a third of our lumber comes from Canada. How are we going to replace that, please? So, anyway, all right.
Plastic. We'll build plastic homes.
Oh, for God's sake. Okay.
Concrete homes. We can build concrete homes.
Let's talk about, so Robbie, we took a long break from talking about recession because I got so sick of it that I was going to turn it into a drinking game. And every time we said the R word on the show, we were going to have to take a shot and not of smart water. So I am sorry to hear that the recession talk is not only back, but it's widespread. Like a lot of people are talking about it now. And they're also including stagflation into the mix, which just, again, I'm going to remind people, it is when you've got a stagnant economy, you've got elevated unemployment and elevated inflation. And so it is not good because then it makes it very hard for the Fed to make any sort of.
Hold on, Audrey.
What?
You want lower rates, right? What did you think was going to get us to lower rates? What's an ideal scenario to get people, going?
Okay, so for me, I think that rates in the sixes are normal for the market. I mean, they're on the low side of normal, to be honest. So I am not the person who's sitting around and going, oh, if only they were 5. Because I know in my almost 36 years of doing mortgages, how old are you again, Robbie?
Younger than that.
Uh-huh.
15, I think.
I know that no matter what the rate is, they're always going to want the next lower rate. That's it. That is literally how it works. So everyone keeps saying, oh, if rates were just in the 5s, oh, if they were just in the, whatever you get to, they're going to want the next lowest thing. So I am over it. I'm like, let's focus on doing what we do, which is get people into houses. And if we can refinance them and make it better, Ruby. But if not, focus on just doing business. So we have
hold on, Audrey. I'm interested. What's the sentiment amongst your clients? Is like, might as well get a house, before these bidding wars drop.
I don't have
best protection against inflation. Buy a house.
I don't have issues bidding for rates, but I don't let that narrative stand. Like if they start babbling about rates, and I mean babbling in a very respectful, professional kind of way, I literally I educate them on here is the deal. So while waiting for rates, the values have done nothing but go up. It's a fool's errand. The best time to buy is today. There's no I do hear people say, and these are not my clients necessarily, often like, somebody who is listening to some sort of news source, I use that word lightly, that is, saying that there's going to be some big blow up in values and that the whole market's going to explode. And when I remind them that we have 1.9 million household formations a year and we're building $1.2 million, $2 million, 1.2 million units per year, we have a deficit in housing and it's not expected to change in the upcoming year. So I help my clients understand what the reality is. That is the value of knowing what is going on in the economy. And then we move it along. That's it. So, and also I've been doing, I mean, we've talked about this ad nauseum. I have done a fair amount of, a big chunk actually, of private money in the last year and a half. And I can look somebody straight in the eye at tell them that the rate is 10.5%, and here's why. And here are the numbers. Let's figure out, does this make sense for you? So
I did it at 12 and it still made sense.
well, and we had a guest on a couple weeks ago who remembers when he was doing hard money and the rates were 16% and 7 points. Now we're talking 10.5% and 2 points. I mean, you know what I mean? So
Fair.
yeah, it's all, does it cash flow? Can you afford the payment? And again, when people are like, oh, it's unaffordable. Okay, well, maybe if you weren't ordering Uber Eats every night of the week or, a big chunk of the time, maybe if you cook something at your house on occasion, and maybe if your car payment wasn't $1,200 a month, maybe you could afford a house.
I think
Maybe.
Kevin Uber eats his dozen eggs for $30 is what I heard.
Yeah, the Kevin and
There
the
you go, $30.
the Kevin and the eggs thing is a little irritating at this point because we started at $12 a dozen. Now we're up to $18 a dozen. I don't know where the hell he's buying his golden eggs, but it's ridiculous. And if eggs were 18 freaking dollars a dozen, I would move somewhere closer to a decent grocery store, or I would get my ass up at 6 in the morning and go get some eggs for $5 a dozen instead. Good God.
Yeah. Hey, Robbie, you heard the news that Rocket is acquired Redfin?
We wrote about it in the Chrisman commentary yesterday.
And what did you guys say for those who didn't see your article?
So Rocket's acquiring Redfin. It's going to take a couple months to formalize and figure out dot the I's and cross the T's and that sort of thing. But it's Rocket's next play. It gives them a whole new segment of the market. Realtor referral business, your audience knows it well, is huge. They're doing, a good realtor does 10 deals a year. A broker does one deal every 5 years sort of thing. So Rocket's going in on that.
I haven't noticed, but when you go into Redfin, do they push Rocket already?
Are you asking me?
Yeah. Do you know?
I don't know.
I don't know. Be interesting if they currently were working with
So, would you please comment on whether you actually think it's advisable for a borrower to use the same company to do the real estate, the loan? Why don't we just throw in? Why don't they do title and escrow? They can control the appraiser. I mean, if you don't have anybody in the process who has an opinion other than you should definitely buy this house because we're going to make a shitload of money if you do, oh, excuse me, then I don't know, could there be a problem? What do you think about that?
You sound like Kevin talking about eggs is what I think about that. Why does
No,
it bother you? So, I mean, if we can bring,
Balance, I buy this.
if we can bring forward things like title, insurance further forward in the origination process, I think that's a good thing. I mean, yeah, lack of choice is not a good thing, but I think Rocket sees the future, and this is a step toward it. And to kind of have the attitude that I think you just expressed, I think it's not beneficial for the way that the space is evolving.
I kind of think this is going to go the same way as Allstate when Sears acquired it and figured out they would put insurance in your Sears stores and the Craftsman power tools and
Audrey, you had your Sears catalog next to your
exactly. I know you're way too young to remember this, but this way back, 100 years ago, Sears decided that, hey, if we're all one umbrella, everyone's going to get everything at the same place. We'll make a lot more money, and turned out that didn't work so well. So,
well, there's there's the bleeding edge, then there's the leading edge, because I would argue Amazon is doing exactly what Sears thought they were going to do. Sometimes, so
Could
Sears
be.
too far
Although
ahead of its
I
time is
don't go
bad.
on Amazon, look for insurance, but yeah. Um, I
I I think that's where we are actually in this industry with blockchain. I think, my secondary marketing background, I think trading mortgages on the blockchain is the perfect use case for it. You don't have to ship all this paperwork. Everything is verified on there. It's quick. Uh, Watch for that to make a comeback. Maybe not this year, but I do think some things, some people are too far ahead of the curve and they pay for it, and then the wave comes back. Look at the electric car. How long were they trying to do an electric car before Tesla, you know, figured it out?
put 20% of them on the market in California. Yeah, no, we'll
Haven't
see.
banks tried to do this? The banks are a one-stop shop. You just need to go to a bank and they'll be your financial advisor, and they're going to do your bank account, your savings account, your
That's
market and your mortgage. And
What I once again, I don't know why you poo-poo it, because if you're an independent mortgage bank, you get that customer at one point, versus if you're a financial institution, we can refinance a student loan, we can do a personal loan, we can offer wealth management, we can be a brokerage, we can do a mortgage. You know, that's creating value, that's creating loyalty, that's creating customer relationships. Audrey, I don't know why you have such a negative attitude toward it.
believe that there should be some separation within a transaction so that not everyone, I don't think that, okay, with a,
I'll go back to your original point. I don't like my realtor and my loan officer to be in cahoots,
why is that, Robbie? Why?
because I'm going to pay for it.
Yeah,
Mhm.
what's going to happen again?
Answer your own rhetorical question.
Yeah.
I want you to answer it, because that is exactly the point. You are going to pay more because you're going to have, or God help you, if you have one person who's doing all of it, then they have way too much invested in that transaction to let it go if it's not good for the buyer. And the buyer's depending on the professionals within the transaction to help them determine, is the value solid? Is it a good deal? Is there something wrong with the property? Is this a place that I really should buy? And
Can I afford it?
what?
And can I afford it?
And can I afford it? And if you've got if you've got one company who is doing all of that, do you think they give a single crap about whether the borrower's okay? They just want to close that deal because they're going to ka-ching, have another notch on their belt buckle.
You know what the
Yeah.
value of something is, Audrey? The value of something is what somebody's willing to pay for it. So, we live in a free
God.
market.
Yeah,
So
that's
I've told the story before, but when I was in Finland and I got to do on exchange, where I got to talk to every president of every bank in Finland and explain how they do things there. So if you want to sell your house in Finland, you go to your bank because they control everything. They control all your bank, your savings, your other stuff, your insurance, and they control the value of your house. So they only have four main banks and then a couple of small ones. Banks. So what happens is they don't have an MLS. So the customer can't look online and say, well, hey, look, the house around the corner just sold for this price or that price. They have to go to their bank and say, hey, what's my house worth? And the person they go to says, yeah, your bank is worth X. And they just have to accept X is the value of my house. And when I ask them, it's like, well, how do you know that the person who's making that decision is giving them the right number? And their only answer to that, oh, we would never misguide a client. I'm like, yes, you would.
maybe that works in Finland. Sure as heck doesn't work here.
Yeah.
So someone suggested that I buy chickens or own a chicken. I would just like to say we owned 6 chickens and they were picked off one by one by the foxes. It was a bloodbath that was tough to explain to the 8-year-olds. And yeah, that was the end of the chicken ownership.
I think my coyotes would take care of my chickens too, and a
Oh,
mountain.
coyotes.
Audrey, you
So
finally acknowledged the chat's blowing up and it's all coming to host and panelists, so people can't see what's going on. You don't want to address any of these comments? There's dozens.
right now. So we have a comment. Wells Fargo is a case in point. People trusted Wells Fargo to handle multiple aspects of their business, and they were fraudulently opening accounts for their clients. And again, we know that within the mortgage space, the creme de la creme typically don't work for the banks because you make a lot less, right? So somebody who's really good at doing mortgages typically wants to be on their own so they can make more money. Only the people who need to have leads fed to them work at the banks. Well, if that is true in the mortgage space, if they're opening bank accounts fraudulently, if they're doing all these things, do you think you've got the best financial advisor there? Do you? Or do you think they also have a box that you either fit into it or you don't? And if you don't, so you've got somebody who goes to a bank, they're denied, and guess what they think? Oh, I can't get a loan. No, you just can't get a loan there, but they don't know that, do they? They just think, oh, it's them. So now you've got somebody who is now out of home ownership because they went to the wrong place to consult. That is
Yep.
really, really a problem, in my opinion.
Same
So
thing
again,
happens. I'm sorry, didn't mean to interrupt you there. Same thing happens with someone just asked about appraisals, the same thing. So the bank controls the appraiser. Guess what happens? The appraisal comes in low. I had this exact experience where I had two independent appraisers on a property, and then the bank had their own internal one, and he knocked the value by $500,000. Now the property was worth $5 million, but we had two solid appraisals over $5 million, independent, and then their internal, oh no, we think it's worth $500,000 less. Totally blew up the deal. It was like, this is just crazy. So,
very, very typical, low appraisals, et cetera, et cetera. And again, people think, oh, they just accept it. Well, guess what? If you're working with a broker or a lender who has a good understanding of the appraisal process, then we know, oh my gosh, let me look at that appraisal. Is there something on there that is incorrect? Is there something that could be rebutted? And then guess what? You might save a deal for both the borrower and the buyer and the seller. So there are so many instances that it could be a problem. So we have a comment, you might pay less, right? With that setup. And they went on to say, if you have disclosures, you have transparency. If you have transparency, you can compare options, period. End of story. Nope, not end of story. Because guess what? Because we now have click, click, click on disclosures, no one's reading their freaking disclosures. I challenge you to talk to your borrowers and ask them what they just signed. They have no freaking idea. Not even a little, not even the smart ones, not even the engineer types that we've known for freaking years who
not
always went through every single line and every single penny. And they're like, click, click, click. And at the end, they're like, oh shit, my loan amount is off by 100 grand. I wish I noticed.
not
They
even
don't.
loan officers, when they do their own loans, they don't read it. They click, click, click.
Good God. Anyway, so that is a problem these days because we have technology, which can be great when used correctly, but we are losing touch within the process with the consumer, and they are not, everyone likes to cite, oh, well, nobody's shopping for their shopping loans, right? I mean, a big percentage, Robbie, do you remember what it is? Big percentage of borrowers don't even shop at all. Well, if you meet someone you trust, you're not going to shop. But also, they're not reading their disclosures. A lot of them don't realize that, a big, huge company that shall go nameless that quoted them this really great rate is also charging them almost 4 points, and they're 86 years old, and they'll never, ever be able to keep that loan long enough to recapture the buy down of the rate that those points bought. Do you see where I'm going with this, Robbie?
I would hope that you would have practical solutions to all these things that you're railing against on this show. I was going to ask you to say something nice or like upbeat. Everything's railing against it. More people in home. Sure. What's going to get them there? Not taking advantage of borrowers. How do you do that with your clients? Give us some practical advice here.
We are doing that. Like loan officers, the people who bother to show up here every week, who want to make sure they understand what's going on in the market, they want some different ideas, etc. We're all engaged. But the people who are just notching up numbers, they've got these teams and they don't really know their borrowers. They don't know what they need. They just stick them into the box that's easiest and simplest, and that's it. It's not just about rates. And that's what gets lost in some of these discussions. And that is so important to bring us back to, ultimately, should be about the borrower. It should be. It's not in a lot of situations, because all I hear from these C-suite guys, et cetera, is, and I mean, not just guys, but whoever, is it's all metrics, it's all dollars, it's all their bottom line, what's good for them, how are they going to use the borrower's money. I heard this conversation about impound accounts. Oh, well, we're using that money for something else. Like, we don't want to have to pay interest on that money to the borrower. It's the borrower's freaking money. Ugh. Robbie.
Are any of your borrowers considering refinancing because their escrow has gotten so high, or, their insurance resets? I've heard grumblings about that, but I wanted to ask you.
That I have not experienced it myself. Has anyone else?
I mean, I personally, my escrows jumped up a lot,
Yeah.
but
I have heard lately is I've had a couple of borrowers contact me and say that their servicer is asking them for that they have to get new insurance because their insurance company that they're using is no longer rated A, and that they can't, and if they don't get new insurance, they're going to do forced insurance on them. So I've heard it, but I have not had somebody, no, that's not true. I had somebody call me and ask me about I told them it was a terrible idea. Like, we didn't need to refinance their really low rate to figure out all that. So
Hey, I
there you
I have
go.
a I have a personal question here. How do I shop for insurance in California when my premium goes up so much? How do I tell my mortgage company I want to explore other options?
Well, hopefully you're using a broker and not just going to a one, like if you go to one company that is they only have one option, just like with a lender, if you're going to a lender and you only have one box, then you're limiting yourself. So go to a broker, and it wouldn't be a terrible idea to call a couple of brokers. And weirdly, I've had some clients have a really good experience. Well, and again, this is before, I don't know about filing a claim with them, but not Allstate, good God, AAA
Broker.
has had
Texted.
what?
I texted my insurance broker. Good, thank you.
Yeah. So the broker, it's got to be a broker has multiple options to shop from. And hopefully they are aware of what's going on in the market. They understand the difference between admitted carriers and non-admitted carriers and what the pros and cons are, et cetera, et cetera. And just for the record, I'm working on getting our insurance commissioner for California on the show, because when I spoke to him, or not, well, I was the moderator at a conference in Newport Beach last August. It was very interesting, and it'd be nice to get an update after the current situation has changed so much. So there you go. And just, we have a comment in the chat: no CFPB to supervise, regulate, or deter bad behavior. People are talking about bad actors. I actually am working with a couple of regulators to get them on here, because I want people to be aware of what our other resources are while we have a handicapped, at least hope at the moment, CFPB. So there are other options, or are
so
other
what,
places.
you're saying we can't violate all these rules now because the CFPB is gone?
Well, just remember, unless they completely dismantle that legislation that created the CFPB, there is a 5-year look back. So as we've seen these massive swings within the industry, within the regulatory environment, it is possible that we won't have the same administration in 5 years. And if that is the case, and you were a bad guy for the previous 5 years, it could still bite you in the tail. So we got that going for us.
Thankfully, I don't have a
Let's
tail.
see. What?
So thankfully, I don't have to
Okay, we have
don't
another
worry
comment
about
from
that.
think of builders who control all aspects of the purchase transaction. You get neither the most competitive interest rates or the best service from title or escrow. So again, I think we have a lot of really good examples of why this is not a good idea. And again, when we talk about monopolies and, you've got to be careful.
Hey,
Yeah, be careful.
change the subject back to the jobs report. I just learned this week that the California Department of Labor reports their job numbers to the federal government 2 weeks after the job reports come out. So we've always wondered, how do they not get these job numbers correct? It's like, well, if California, which is 20% of the market in the country and population, doesn't have their numbers to them, they're using old data for California. No wonder they can't get these numbers right. Why doesn't the Fed just require all the states to report all their numbers in a timely basis, or wait 2 more weeks where they have more data?
So when I pose that question to economists, often I'm told it's better to have current bad data than old good data. So they'll take the crap over, as long as it's current crap, over the actual numbers that are a little older.
Poor
I just
Robbie
want,
is, wait, poor Robbie's head is spinning right now over that comment about using bad data is better than waiting for the good data.
I don't like any of
well,
them.
Rory, the comment, Robbie seems to be looking in the chat. He ignored the defense of me. Audrey
I
does
was
a
gonna say
lot.
the people jumped to your defense and said you teach them things all the time. So I'm sorry, loyal Mortgage Pros community.
Right here on this call. So maybe if you tuned in more often, you'd realize that.
Now, Robbie, if you attack me, no one's going to jump to my defense. I'm pretty sure.
Well, they will tell you how.
Audrey's like Mama Bear, you know. She's like
Yeah,
Pachamama. Yeah.
Uh-huh.
That is so true. If you need to be defended and you're right, I am all over it. So
And then, hey, Robbie,
anyway,
what do you think about SBA moving out of cities that have sanctuary cities? Does that mean we won't be able to do SBA loans in anywhere in California?
I'm not well versed enough on that to
Oh.
answer. You have thoughts on it?
I think we're screwed, just personally. And
Audrey?
yeah, not in the fun consensual way either. We're just going to be screwed.
Audrey, that's a perfect segue to talk about my love life. I thought that's why I came on here.
no, we're not discussing your love life. It's too sordid for this venue. I mean, come on. And by the way, who can even keep up with it while we're at it? So there's really no point because by the time we discuss it today, it will change 3 times by tomorrow. So whatever, right? Okay,
Isn't
so
that what that's what Kevin was saying about bad current versus good old? It changes tomorrow.
really,
Anyway, sorry.
really, just a little reminder that the markets are pricing in 3 rate cuts this year. The Fed is meeting again on March 19th and 20th. So, stand by for that. The Fed beige book is showing this. Okay, I heard you.
Before you move on from that, I just want to say I'm using that with clients who are looking at taking out a equity line. I'm like, well, listen, there's Fed is saying there's going to be 3 Fed cuts. That's 3/4 drop. So yeah, prime rates now is at 7 3/4. So that'll mean it'll be down to 7. So that's it's a selling point for these people that oh wow, it's a little bit high right now, but yeah, it's going to get less. So.
Okay, by the way, before we move on, Lilia was saying, my experience recently is the majority of borrowers who have impounded accounts have no idea who their homeowner's insurance is with and how much they're paying. I just had a client paying $4,200 a year. He had no idea. I was talking to someone yesterday and they were saying, oh, I know. They were saying there's this place that's close to here. He was at a party at this guy's house. The guy pulls him aside because he knows he's connected somehow to the insurance business. And he was paying $20,000 a month for his $15 million house in Diablo. So it's crazy. Yeah. Wendy said they may not need to refinance, but we can help them understand why the payment changed, shop insurance, look at the total situation. Often there are options to consolidate other debt. Sadly, many don't realize the interest rate they're paying on their credit cards. And that is 1,000,000% true. And also their car loans. Like I know that my car loan is at 1.95%. So I have no incentive to pay it off right now. But I saw a borrower's car. I didn't even know rates were this high at almost 18%. So they'll pay 18% for their car loan. They'll pay 32% for their credit cards, have no clue, but they're so proud of their 3% mortgage rate. It doesn't make sense. So just again, this is an opportunity for us as professionals, not the guys who are just like racking up the numbers, but those of us who actually care about our clients and are really concerned about them now and in the future. This is a great opportunity to go and help them. It really is. So, I mean, we're lucky in that sense. There are things that we can do, and we have so many loan options. We talk about them all the time on here with all the non-QM options. I don't have to chuck tax returns in the garbage anymore and throw away clients. Self-employed people have options. It's wonderful. So, okay, Robbie, I heard you quote somebody who said loans should be done by design, not by decline. What does that mean?
Me? There's a Robert Chrisman in attendance. He might be able to tell you in the chat.
I thought I heard you say it in your
In the
podcast.
podcast?
Yeah.
He wrote it. I regurgitated it. But I do, okay, all right, to that point, I do think we're getting a lot better with technology to figure out what borrowers are ready to qualify for certain loans, fitting them into the right places. I've actually heard of AI technology that takes decline borrowers and maneuvers them to get them into the right thing.
What we do.
That's where a good LO comes in, is you're supposed
Yeah.
to put the borrower in the best product that suits them, right, Audrey? Or Kevin?
I was doing that this morning before the call. I had a client who wanted to buy a house, and we were thinking, well, maybe a reverse would work for you. And then she had said she had some rental history. And I thought, well, what if you did a reverse with a rental property? So you buy a 3-unit building, you live in one of the units, do it as a reverse, and you can take the income from the units to qualify for the reverse, because she had no business income. She basically just retired. And she wasn't taking social security yet. She was just living off her assets. And we're like, well, you need to show some income first thing. We started doing the math, but then we learned that a reverse requires that you have 2 years experience on your tax returns with rental income, or they won't qualify you with that income. So we just said, okay, well, let's do this as a long-term plan. Let's have you start renting out, your place on Airbnb currently. So now you have the rental income, get that experience down, maybe buy an investment property, not as a reverse, but as a regular, put the money down and buy an investment property and get that money income. And now you have the experience of dealing with renters, and then move and buy a 3-unit building or such as you're thinking about doing on a reverse, use that rental income for stuff. And as we just did all the math, now like she's looking like having much more income, and she retires than she was if she had just done the original plan. So yes, we sit down, we figure it all out and figure out, okay, here's the best option for you. So we do all the time.
So Robbie, hopefully this was your quote. AI value. AI won't take your job. The person who knows how to use AI will take your job. So let's talk about that. So what are the AI tools that we could be using as LOs to increase our business and help our borrowers?
Well, start small. Start with a chatbot one way or another. Microsoft has Copilot, ChatGPT, things of that nature. Ask the executives at your company, what technology do we have at our disposal? How can I maximize using it? How can I make my life easier? How can I make myself more efficient and shorten the time it takes to do my daily processes? That's a good starting point. Audrey, I have to run. I told you this.
Okay. Well, it
Oh,
was seeing you.
His car is ready for pickup.
What?
His car is ready for pickup.
no, we have another Chrisman commentary show that I have to go to. Capital Markets Wrap. For anybody looking for the explainers about all things secondary marketing, why rates are doing what they're doing, what tariffs mean, inflation, that sort of stuff. Check it out. ChrismanCommentary.com. You can find everything there.
Sounds great. All right,
Even us.
Even you too. Yeah.
we're gonna continue to talk about. Bye, Robbie. Good to see you. Thank you.
Hey, Robbie.
Yeah.
Some of the comments in the chat as we finish out the hour.
Rob, by the way, Audrey, the chat has blown up today. I don't think we've ever had as many comments.
I know. Did you see that they think you need to go to other places to buy eggs too?
Yeah, I saw that one. Yeah.
Okay, so somebody said that they just had a client that they refinanced. They discovered that for the past 4 years, the property was coded as a multifamily versus a single family. Crazy. It was never noticed due to it being escrowed. The client had no idea. Previous lender purchase didn't catch it either. So again, this gives us so many opportunities to be an asset for borrowers and help them, right?
Wait. So what was the problem? So the lender says we don't want the loan because it's multi-zone?
More for insurance because it was multifamily,
Oh.
single family insurance. Good God, right?
Well, wait a minute. No, that doesn't make sense, because
Kevin, it is a fact. They just said it in the chat. It was what their borrower experienced. Don't argue with it.
I'm saying, because an insurance company is you only have to insure what is there. Like, for instance, we talked about this last week. If you have a 3-unit,
Why are you
2-bath, but it's only legally a 2-bedroom, 1-bath, but you pay the premium on the 3, you get the coverage. I don't think they're going to make you go and say, wait, I have a 2-bedroom, 1-bath home. I don't want to pay for a multifamily house. Now I've seen this come back with the investors where I had a deal where I did a 2-unit building, and then 6 months or 9 months later, the investor comes back and goes, well, the property is zoned 3 units. I'm just like, well, just because it's zoned 3 units doesn't mean it is 3 units. It's a 2-unit building. The zoning got changed along the way. And they came back and they said, well, they made our bank actually buy back the loan, and they ended up having to sell it with in the dings and dents category. But I was like, this is stupid, because they're saying if it burnt down in a fire, they could rebuild a 3-unit building. And I said, well, if it burnt down in a fire, it would be a lot. You don't do lot loans either. This is no logic to this sense. But anyhow, they do that stuff.
Okay. That literally did not at all correlate to what this person was saying, which is the borrower was paying more insurance than they needed to, and they had no idea because it was impounded. They don't look. People don't look at what.
Yes.
I'm glad that we cleared that up.
Yeah.
James, God bless you, said, I enjoy the non-milk toast conversations. It would be boring otherwise. Well, yeah, if you're bored by this, I'm like, let me say, it's funny because people are like, oh, they gamble, they drink a lot, they do drugs. I'm like, dude, I don't feel like I need to do any of those things. I'm in the mortgage business. I mean, every day is exciting and new and different and crazy. Okay, so just because what would another week be without an update on the BOI, the beneficial owner's interest?
Oh yeah, that's a crazy update.
Oh my God. It literally, I feel like it's just like, it's on, it's off, it's on, it's off. Oh, nope. Now it's sort of on,
Change.
but only if you're a foreign investor is our latest update on that we think. So
But
don't,
wait a minute. I wasn't born to American citizens.
no, you shut up.
Therefore, I might be
I don't want to hear it. Just
kicked
stop.
out. Therefore, I would have to report.
Okay. So one of the things I heard a conversation about people who are using AI to contact people and leads. And I talked to other people who are in the CRM space, and they talk about how important it is for borrowers, for somebody who is looking for leads and buying leads to respond. Like they literally have seconds, right? But on the flip side of that, so they're all looking for ways to maximize or minimize the amount of time it takes from the time that they purchase lead to the time the client is contacted. I'm just going to say the opposite side of that is I got an email yesterday from a borrower who said, I don't know if there's anything you can do, but we're being inundated. And, so again, the trigger leads, right? So I think it's very interesting that on the, let's make as much money as possible. Let's turn this into a commodity. Let's just burn and churn through as many borrowers as possible. You got that part of what's going on out there. And then the other part of it is our borrowers are like, please stop calling me. I don't want to hear from anyone else. They don't. You know what I mean? And again, there's so much fraud, there's so much other nonsense going on out there that for the people who think that that is the way forward, it's very interesting. Very, very interesting. So anyway,
Hey,
okay.
something else.
Ed made a comment, it's a game and we are the pawns. They want us to feel like they're standing up for us and don't want us complaining about how they are putting tariffs on our goods. Anyway, and then he also went on to say, Kevin, that means you're trusting the markets to find a balance. Well, I hope so. Anyway, and he also noted, he was referencing the BLS jobs report, which we did not cover, which, how much I love that. But the establishment survey, they were expecting 160 to 170,000 jobs. We ended up with 151,000 jobs, but 136,000 of them were from the birth death model, which we have found to be wildly inaccurate. And that the only cohort that increased in the jobs report were the 16 to 19-year-olds. So do the math on that.
Well, they're buying houses pretty soon.
Well, but they're mostly doing part-time jobs, right? So like thinking that, and then full-time jobs, we lost 1.2 million full-time jobs and then gained 610,000 part-time jobs. So I don't know. We'll see. It isn't sunshine and roses as much as, there you go.
Hey, I ran into a little landline with opt-out pre-screen for protecting customers from trigger leads. The opt-out pre-screen only lasts for 5 years. And I got caught with that where I knew I had gotten them to do the opt-out last time I was dealing with them, but it turned out it was just over 5 years. And guess what? Bam.
Well, a reminder that you said they changed it, so you can't do it for them anymore. They
Cannot
have,
do it for them anymore.
yeah.
Yeah,
So-
you have to say that it's not, this is actually me who's inputting the data.
Yeah, you have to, there you go. All right, kids, it is noon. It is time for us to go
How'd
get
that happen?
and close loans. So have a great week. The rates are the rates. Go find a loan to close. Help your